guys, it's Ariana Rivesca. If you're new here, welcome. I talk all about stocks, real estate, and just entrepreneurship in general. In today's video, I'm going to show you guys my sneaker collection. And I'm also going to be talking about what the hell has been going on with the stock market and the economy or whatever. But yeah, this is going to be like a fun video, I think. Yeah, if you guys are interested in learning more about me, check me out on social media. I also have my website linked below where you guys can schedule Zoom meetings with me. So if you want me to take you through the entire process with stocks, you guys can hit me up and book some Zoom meetings with me. I also have free Zoom meetings. You get one free Zoom meeting if you're interested. I'll leave a link down below. The reason why I wanted to show my sneaker collection is because, first of all, those videos are super entertaining. I also want to document my journey with sneakers. Like, I want to look back at this video and be like, damn, I had those sneakers. You know, like, I don't know. I think it'd be cute. But most importantly, the overall economy, or like even the stock market, is very, very similar to how shoes work. As we all know, COVID happened, and this was in 2020. Before COVID, we could easily export and import goods overseas. For some time though, that all had to be stopped. So this happened in April, or around like April through June 2020. And I remember those months especially, everyone was scared of COVID. The grocery stores were dead. We were running out of things. Like, I remember going to the mall for the first time during COVID, during the pandemic, and I realized like, damn, there's like nobody here. Same thing with the grocery store. I would go and I'm like, damn, where's everybody? We were running out of things like toilet paper, hand sanitizers, etc. I mean, it got to the point where grocery stores had to set limits on how many items you can buy. In summary though, we were going through a supply shortage. Now, I am no economist, but I did take a macro econ class over the summer, and the main focus of this class was supply and demand. Whenever supply is low but demand is high, prices increase. Whenever supply is high but demand is low, prices decrease. And that is how shoes work. Like, there's always a limited stock of each shoe, and based off, you know, the amount of hype that there is before the release or whatever, predicts the price, the resale price of the shoe, right? Because retail price always stays the same, but because the supply is so short, you know, only a few people can get their hands on the sneaker at retail price, it makes the resale price increase like crazy because there is so much demand of this shoe. So many people want this shoe. That is what demand means. Just people wanting something. I'm only gonna show my sneakers because who cares about my girl shoes? I have 3 pairs of like chill shoes, you know, shoes that I don't really care about. These are the Air Max 97s. And they're just white. What I like about these shoes is like they're hella comfortable and they look freaking dope. They're dirty as hell. I swear I have not cleaned them once since I got them, and I got them like in middle school, I think. Air Forces, right? And I don't know, I'm not gonna show these too much, but they're Air Forces. I think everybody has Air Forces. A little tip, guys, is keep them in your box because then they get yellow. That's what happened to my last pair. But keep these things inside of your shoes so they don't crease. They're creased somewhat, but they're not that creased, you know? Wait, can I focus? You see? Can never go wrong with Vans. I love these so much. I barely wear them, but I love them. And then that's how I tie my shoelace. Dude, I don't know what else to say. Now I'm gonna show you guys my nice shoes. You know, like the shoes I wear when I'm trying to be drippy. Dunks. Georgetown. These are so nice, dude. I just got these too. They came out in like October or something, and I got them for $160. I don't know what they were going for in retail price, but yeah, these are the Georgetown Dunks. I mean, look at that, bro. Oh my gosh, I love the like gray instead of just white right there. Hold on, let me show you guys. They look cute as hell, bro. And look, no creases. I've had these for like 2 months now. Come on, focus on me. No creases. Taking good care of them. These went up for sure, bro. I think last time I checked, my size was going for like $220. So I could for real sell them if I wanted to. Then I got another pair of Dunks. I got these ones at the same time that I got those ones. I had seen that the Georgetowns were gonna drop, and I was debating on whether or not to get the Georgetowns or to get the Pandas, and I just got both. So yeah, these are nice too. I have definitely worn these ones way more than the Georgetowns. They're kind of dirty. Damn. I'm for sure gonna be cleaning these soon. But yeah, these are the pandas, and they're like, it's a classic, bro. Like everybody gotta have these. Yeah. Look at how sick they look. The next ones are honestly like my favorite out of all of them. But I barely wear them, dude. But they're so nice. I freaking love these. I love fours. Yeah, these are the white Oreo fours. They're so freaking cute. Look at them, bro. Oh my gosh. They're so cute. And these ones definitely are creasing. I take good care of them though. Keep the little thing inside. Damn, they're creased. Look at that shit. Yeah, these are the white Oreo fours. But yeah, like I said before, for example, with Georgetowns, I'm gonna check the Georgetown price right now on Go. Damn, they're going for $250. Look at that, bro. I don't know if you guys can see that, but they're going for $250. This is literally like, this is proven to you. Low supply, high demand, prices go up. And by the way, all these sneakers, I got them off the GOAT Samuel Resells. Go check them out on Instagram. Let him know that I sent you. Look at him. He's a freaking GOAT, bro. Go check him out. He's a homie. Go check him out. Go get some shoes. And that is exactly what has been going on throughout the entirety of the global pandemic. We had low supply because the cargo ships could not travel overseas, obviously for health reasons. Meanwhile, the entire country over here was freaking out and just kept stocking up on possibly everything and anything they could find at the grocery stores. This caused inflation to go up because prices were increased at such an unhealthy rate. Now, not all inflation is bad. Prices increasing could just be a good sign of like a good growing economy. But like I said, the pace of how it is increasing right now is bad. Let's take a look at this chart. So as you can see here, on October 2020, inflation was at 1.2%. The most significant change was in February 2021. It went from 1.7% to then in March, it went to 2.6%. Then in April, it picked up to 4.2%. And since then, we're here on October 2021. So 1 year later, inflation is at 6.2%. But as of today, in December 2021, inflation has gone up 6.8%. We can also look at the past 5 years. Before 2020, inflation at the most has hit like 2.9%. On average, it's around 2%. That's like the ideal rate that you want to be at. You know, 1 to 2%. It has been 39 years since inflation has been this high. The last time it was this high was in 1982. Back in 1982, inflation was at 6.16%. Now, we cannot control inflation, but we can do things to better it. The first way is increasing taxes, which is what we see with Biden trying to tax unrealized gains on cryptocurrency. The other way is through the control of the Federal Reserve. The Fed, in other words, is basically the bank for all of the United States. They are in charge of the nation's investments and money. They are also ones to control interest. Interest rates play a huge role in our economy. Interest rates are the less people borrow money. Therefore, our banks don't have enough business. Therefore, the economy doesn't grow that much. The lower interest rates are, the more people borrow money. Therefore, banks get more business. And that's why you get more out of your investment when you invest in real estate when it's at all-time high rather than when there's a market crash. Because if there's a market crash, probably means because interest rates are high. When interest rates are low, it means you're paying more money towards your principal, aka your house, rather than interest, aka the bank. The other reason for the real estate market being so crazy lately is also because of the supply shortage, like we mentioned earlier. So low interest rates and low supply means prices are gonna go to the roof. And the way they achieve these low interest rates is by buying or selling bonds. If the Federal Reserve buys bonds and puts more money in the market, this means interest rates drop. If they sell bonds and do tapering in the market, this means interest rates will increase. This is how Jerome Powell, who is the head of the Federal Reserve, he's the chairperson, this is how he's planning on reducing inflation. Their plan is to gradually stop buying so many bonds by March 2022. According to them, there will be 3 interest rate hikes in 2022, another 3 in 2023, and 2 in 2024. From this, they're projecting inflation to stay around 2.6% in 2022, which means interest rates will be adjusted, and this will help calm down prices a little more. What does that mean for us as investors? Well, as you guys have seen, the S&P 500 has been dropping pretty heavy lately. What I've been doing to manage this is increase shares in the current companies I have. So what I'm doing is I'm taking note of all the stocks that have been staying consistent and just adding like 1 to 3 shares. For example, I've added to Nvidia, I've added to Crocs, I've added to Bank of America, I've added to Ford, I've added to SPY-G, and I've added to Oracle. I really think through these hard times is the best time to get to know your portfolio, to get to know which companies you own that are the strongest companies. Remember that sometimes there's those stocks that although they have really aggressive growth, when the S&P 500 gets hit hard like this, they take a while to recover, because with that aggressive growth also comes those really aggressive drops. I mean, we see that with C Limited, we see that with Square, we see that with Snapchat, Pinterest. Pinterest has not been able to recover. What I've learned from this experience is that it's better to just stick with consistency. Like, if you can find stocks that are both aggressive, like that have really great growth and are consistent with their growth, then those are the best stocks to invest in. Now, these are stocks that I just mentioned, like Crocs, Microsoft is really good, Nvidia is really good, Costco is amazing. Make sure you check those big drops in the chart of the stock. Just see how frequently they happen, how long they usually take, and the average amount that it drops by. If this average amount is something that you can work with, then go for it. But if it's not, maybe just make sure to go into that stock with a little amount of shares. Thank you guys so much for watching. Have a blessed day. Bye.